There's been a structural deficit, supply and demand deficit, um, and that deficit is what, call it 300, 400 million ounces. I mean, it's huge. And this whole year was dominated by AI. You can't have AI without silver. Silver is part of so much of that application. We also heard, I guess it was a week or so ago, maybe 2 weeks ago, that there's a new battery, an EV battery that charges in 9 minutes and goes 900 kilometers, but it requires about a kilogram of silver. So you're talking about, for every battery, you're talking about 32 ounces. That's going to also increase the demand. And from the supply side, you can just see it in the vaults, all three of them, LBMA, COMEX, and Shanghai. They've just been being drained on a daily basis of physical metal. And that big smash we saw yesterday, that was paper driven. And you can see that because Shanghai, I mean, New York was down, what, $7, $8, and Shanghai was barely down $3. So that finally what's happening is the cash markets are coming out in front of the paper markets. The paper markets, the games they've played for the last 50 years, they're coming to an end.
Yeah, it's very interesting that you highlight these three different exchanges, because when you look at the Shanghai exchange specifically, it's where a lot of physical metal is actually being traded. It's trading for quite a significant premium, silver specifically, compared to the other exchanges, isn't it?
Yeah, I mean, that shows you right there that cash and carry is trumping paper markets that are simply contracts. Contracts are made to be broken. And I mean, the answer is zero. But how much is a contract worth that cannot perform? Zero.
Yeah, and I believe this is called backwardation, where you have a physical market that's trading for a premium compared to a paper market. Who is really the one that is buying all this physical?
Yeah, backwardation, uh, what you're talking about there is where the futures price should always be higher than the cash price because of uh, carrying costs and interest. That's called contango. When you get the cash price above the futures price, that's backwardation, and that shows that investors don't want to wait 30 days, 90, 60 days, 90 days for their metal. They want to pay for it today, and they want it today. And now, from an exchange standpoint, as you just pointed out, the physical exchange is trading far above, and I mean that premium is blown out to $7, $8. Yeah, about $7 or $8. The cash market, the cash exchange, is ahead of the two paper exchanges, COMEX and LBMA. That is blatant, outright backwardation. It tells you investors are not willing to wait for their metal. They're not willing to trust that they're going to get their metal. They want it. They want it now.
Do you think this is a structural shift, a type of permanent change that we have seen in the silver market, and it will continue to go forward this way? And how could this potentially play out, Bill?
I 100% believe that this structural shift is it's permanent. It's what's going to be. It's the future. Paper contracts are not the future. Paper contracts are dying. And the same could be said for the dollar itself. The dollar is dying, and what's going to supplant that will be some type of BRICS currency that has some type of real backing. And obviously, this has been the BRICS currency been in the works for years and years. And I think wiping away the paper markets being able to price metal, I think wiping away that ability is all part of bringing a backed currency forward that can be trusted.
Very interesting thread there on that, remonetization that I would love to pull in just a second. But before that, What can the exchanges do to kick the can down the road a bit further? Are there any historical parallels with interventions, for example, that we can draw upon on tools they'll try to use to try to, patch the system back together?
Yeah, you're probably referring to like what happened in 1980, where COMEX said we're not accepting any buy orders, we'll only take sell orders. That was when the world was truly US centric. We were the center of the universe for finance. We were the center of the universe for a lot of things. That's no longer the case. The COMEX could say we're not going to accept buy orders and the price go to $3, but Shanghai goes over $100. What will happen is the rest of the world is now more powerful, if you will, than the US, where it used to be the US was more powerful than the rest of the world. I mean, there's no way that they could outlaw buying on COMEX and expect the physical price to go down. Whenever you tell a human being that they can't have something, they want it even more.
And talking about the gold, is it a very similar story as well? I mean, with silver, of course, we're talking about incredible premiums that you're paying for that physical metal compared to the futures. But are we seeing a similar trend for gold as well?
You're seeing it in a smaller way. The Shanghai premium is much smaller. Understand that gold has been mined for thousands of years, and pretty much all the gold that was mined is still above ground. It's either in storage form or it's jewelry. It doesn't get used like silver. Silver, when they pull an ounce of silver out of the ground, how many different uses are there for that? You've got solar, you've got medicinal, you have technological, you have jewelry, you have just investors buying it. The silver that has been produced over the last few thousand years largely has already been used. There's not any big stockpiles, whereas gold, there are some very, very large stockpiles, and I think larger stockpiles than are being let on. I think Russia and China both have well more gold than what they're letting on, and I think the U.S. has far less gold than we say.
Interesting point you're making there with silver. Of course, it is an industrial metal. It is being used, and it also is oftentimes a byproduct when it's being mined, isn't it? So, ramping up significant mining capacity is hard to do as it is a byproduct, and the cost is oftentimes carried by lead or zinc or any other material.
Yeah, it's a very inelastic supply.
It's an incredibly interesting market from that perspective, that's for sure. I would love to pull that thread on gold remonetization for a second longer. You mentioned that BRICS settlement currency that is being floated currently, partially backed by gold, potentially the rest backed by fiat currencies in these BRICS countries. Do you think they will likely see that settlement currency actually be installed over the next few years?
It certainly looks like it will. I mean, what they've talked about in the past, they've held pretty much to the timeline. We don't have a timeline for a final release, but the weaker the U.S. gets, the easier it will be. The easier it'll be to bring that currency forward. And day after day after day, the U.S. is getting weaker because, I mean, we're paying what? We'll pay probably 1.5 trillion in interest this year, and add an additional at least $2 trillion to the debt pile. And, I guess you could say debt weakens knees.
That weakens knees, all right. And the incentives, of course, for the US also seem to be aligned with remonetizing their gold to clean up the balance sheet and make this interest problem that you're outlining look a bit less worse. Do you think this BRICS settlement currency could force the US to remonetize as well?
If we were to cover the outstanding debt with the gold that we say we have, you're talking close to $150,000 an ounce. That's where the price would have to go. But that's assuming we have 8,300 tons. And I personally assume that we do not have 8,300 tons and that gold has been going out the back door for years and years and years. 1956 was the last year there was an audit.
Yeah, well understood. And talking about this BRICS settlements currency that could potentially, remonetize gold through a different system, what type of shock waves would it send throughout the precious metals ecosystem?
it's not just precious metals. You're talking about trust. You know, gold is money. It's the only currency, gold and silver, the only currencies that you can trust. Everything else is freely printed. Everything else is fiat. So the shock waves will be one of trust, and the shock waves are not going to be held just to the precious metals markets. It's going to, if silver fails to deliver, and I fully expect silver to fail to deliver in both New York and in London, but when it fails to deliver, that is going to affect all other derivatives because everything runs on trust, and it will probably create much, much higher interest rates in the US because borrowing is done based on trust. And if trust is collapsing, you know, then we'll finally have a risk premium for owning US paper.